Hello, my name is Nick Grantham. I am a CPA and a partner here at Sullivan and Grantham, PLLC. We are going to talk about something today that a lot of our clients ask us about, and that is estimated tax payments. What are these? Why do I need to make these? And how do I make these payments? So, we'll talk about those things today in this episode. So, first and foremost, what are they and why are they necessary is what I wanted to mention first. So, really, what an estimated tax payment is this is going to be for people who typically are not withholding. So, if you're an employee somewhere, you've noticed that each time you are being paid and each time that payroll is being ran for you, you're getting a net amount of your actual payment, right? So your compensation, maybe it's $1,000 this week, but if you look at your paycheck, maybe you only receive $800. So that $200 difference is generally from withholding, tax withholding. Now, there's going to be a federal income tax withholding, but then there would also be Social Security tax and Medicare tax. And then sometimes, you might be deferring some into a 401k. You might be having some of your compensation withheld and put into some type of health insurance plan, et cetera. But today, we're specifically talking about the federal income tax. And when you're an employee, that's one of the items being withheld. However, when you're self-employed or maybe when you have income that's coming from other streams, whether it be like royalties or something that's not subject to withholding, then you may need to make estimated tax payments. And so these ES payments are basically just payments where you're manually paying the IRS and you're wanting to pay those in as you earn your income rather than once at the end of the year or even once on April 15th when you're trying to get your tax return in. The reason is because the IRS, they want their tax as you earn the money. So they don't want to wait 6 months or 8 months or a year for you to finally pay them their tax. Instead, they want that tax as you earn the money. So the IRS has given 4 quarterly estimated tax payment deadlines. So there's a quarter 1, this typically would be April 15th due date. There's a quarter 2, which is only 2 months later, June 15th due date. And then the quarter 3 payment would be due September 15th, and quarter 4 would then be due 4 months later on January 15th. So the IRS have these 4 quarterly deadlines. However, you can pay estimated tax any day of the year. So, if you're watching this video and you're like, man, I missed the first couple of deadlines here, what do I do? It's okay. You can go online, you can send a check. We're going to talk about the different methods in making your estimated payments. But at the end of the day, you can pay your tax any day of the year. The sooner, the better in the IRS eyes. But from your perspective, we only want to be paying this in if we need to, and that's what we'll dive into next. So, question 2, who needs to pay? Well, generally, it's going to be anyone who's self-employed. Maybe you have rental income or some type of passive investment income on the side, or if you have side hustles. So even if you're a W-2 employee and you have withholding going on, if you're making a net income through a side hustle, then you may end up being under withheld because your W-2 job is not accounting for that income. So in this case, you would need to plan on paying in some estimated taxes throughout the year. Now, one big question we get and something that maybe is not fully understood is just because you have a side gig or just because you're self-employed, that doesn't necessarily mean you're required to make these payments because sometimes, especially in the first year of a startup business, you're breaking even at best. Maybe you're actually operating at a loss, to get this thing started. So if you're not going to owe any tax, then obviously you don't need to pay in estimated payments. You only need to be paying in your estimated tax if you're making a net profit, okay? So a net profit, that's going to be a net income after all your revenue comes in and then after all those expenses, right? So your business is going to have operating expenses. So after you've considered that, if you still have a net income, then that's when we're going to want to plan on paying some estimated taxes. Now, the next question would be, well, how do I calculate that? How do I figure out how much I need to pay in, right? So some people, what they'll do is they'll just set aside a certain percentage. They'll say, hey, I think that I'm in roughly the 24% tax bracket, right? So if I make an extra $10,000 net from my side hustle, then I'm just going to plan on, paying in 24%, or I'm going to plan on paying 30%, or 35%. I'm going to save that to the side, and then each quarter I'm just going to pay in, one fourth of that, and plan on, getting that tax paid in that way. So that's an option. An option that I would recommend, and something that we help our clients with, is doing an actual tax planner where we actually run the numbers for you, and we can do it, basically perform a mock tax return for the future year to kind of see where you may land, and that can help get a closer estimate as to what you should be paying in. And then the last option would actually just be the most basic formula, and that's where you pay in at least 90% of the tax that you will owe for the current year by January 15th of the following year. Okay, so if we're in 2025 and I'm expecting that I'm going to owe a total of 10,000 in tax, I want to make sure that I've either withheld or paid in up to $9,000 by January 15th of 2026. And then, as long as I get all my tax paid in and file my tax return by April 15th, I'm good to go. There will not be penalties. However, um, the other option would be, uh, so we either pay in 90% of what we will owe for the current year, or 100% of what we paid last year. So if last year I owed 8,000 in tax, and this year I'm going to owe 9,000. Well, I can actually pay the lesser of those two numbers. So I'm going to pay the lesser of 100% of my 2024 tax bill, which was 8,000, and I'm going to pay that by January 15th, 2026. And then again, that'll help me to avoid penalty and interest as long as I pay the difference by the deadline, April 15th. Higher income earners, though, it's a little bit different. They either pay 90% of the current or 110% of the prior year, again, by January 15th. Now, that's going to help you avoid a late payment penalty and interest. However, if there's another penalty for failure to pay estimated taxes. So even if you meet that safe harbor, if you earned this money evenly throughout the year and you didn't pay a dime of tax, and you didn't make your 4 quarterly estimated payments, and you just got a big lump payment in by January 15th, then you may still be subject to the failure to make estimated tax penalty. So just wanted to mention that. Again, that's another argument for the reason that it's important to pay in, the tax that you're going to owe quarterly. The last thing I'll say on that is, some businesses are seasonal, right? So maybe the first 3 quarters you were at a loss or a break even, and it was all in the quarter four where your business earned that net income. And if that's the case, that's perfectly fine. You can just make your 1 quarterly payment by January 15th, and and when you file your tax return, you'll just want to make sure that you show there's a form where you can annualize, when you earned that income, and it'll help to avoid that failure to make estimated payment penalty that I mentioned before. All right, so that's kind of a brief summary of estimated tax payments, why they're important, who should be paying those in. And the last thing I wanted to mention is, how do I make these payments? Okay, we have a few different ways to do so. I guess first and foremost, there's kind of the old school way, and that's where you're going to get a check. You're going to write a check to the IRS, to the Department of the Treasury. There are instructions. So if you really, the easiest thing to do is either go on the IRS website or on Google. If you search for ES payment, IRS, if you type that in on Google, the first thing that should come up is the IRS website, and you'll see under estimated taxes, they have some more information about how to make estimated taxes. And then there's actually what's called the Form 1040-ES. So if you Google and get to the IRS website, and then get to the PDF on their website here, Form 1040-ES, you'll see a page of instructions, or actually quite a few pages of instructions. And once you get to the very last couple of pages, you'll see these vouchers. So they have payment vouchers 1 through 4. And so what you'll want to do is basically print off one of these vouchers here, and it's pretty self-explanatory here. You'll fill out your name, your social. If you have a spouse, their name and social. You'll put your address on here as well. And then you'll write on the voucher how much you're paying on your check or money order. So you'll fill that out. You'll obviously add a check here, and then you will add both the voucher and the check, and then you'll send them to the correct mailing address based on where you live. And that's going to show here in the instructions. So you'll see that it looks like it's on page 5 of the instructions. So if you live in certain states, it may be going to Charlotte, but then other states, it may be a Louisville, Kentucky address, or it may be a Cincinnati address. So there are different addresses depending on where you live. So that's going to be important if you're going to go the old school route and mail these in. Now, if you were asking for my advice, I would highly recommend doing this online. So to do online payments, you have a couple different options. The two we'll talk about today would be the easiest option, in my opinion, is the IRS Direct Pay website link. So again, if you go to the IRS website, or even if you type in Google IRS Direct Pay, the first link that you should see is the IRS website, irs.gov/payments/direct-pay-with-bank-account. And that'll take you to their website here, Direct Pay with a bank account. And today we're kind of talking more so about individual, right? So if you're a sole proprietor, if you have a side hustle, if you have income coming from a K1, you're going to click on the pay individual tax, right? You may be tempted to click pay business tax, but most of these business, if you're in a partnership or you have an LLC, this stuff's flowing to your personal tax return. So it's individual tax. Now, it's different if we're talking about a C corporation paying in their business taxes, but for most who are probably watching this video, we're talking about, sole proprietors, Schedule C, LLCs that are maybe partnerships, or S corporations that you get a K1 and it comes to your 1040 tax return. So we're going to click Pay Individual Tax, Make a Payment. We're going to click that icon. And then we're going to be brought to this screen that says IRS Direct Pay, and it wants to know our reason for payment. So there's a drop down, and you'll see there, probably almost 15 or 20 of these options here. And we're going to select the estimated tax option. It's like the 5th option down here. Apply the payment to 1040 ES. That's 1040 is the name of an individual tax return form. So that's what the 1040 means, 1040 ES. And then tax period, it's obviously only given us one option, and that's because the current year is 2025. So if again, there's something else to mention. What we're talking about today is estimated taxes for the current year. So getting ahead, paying those taxes in. If you're behind and you need to pay for 2024 or an earlier year, you can use this same website, the same tool here. Instead of estimated tax, though, under the reason, we would change that to maybe balance due. And then it would let us select a previous year. So balance due, income tax 1040, and then we could select really any year. It looks like we can go as far back as 2005. So anyway, in today's video, we'll select that estimated tax, 1040 ES in 2025, and hit continue. And then what's going to happen is on this next screen, we're verifying our identity. So this is the big place where people get confused. Option 1, it says tax year for verification. Well, if you click this, 2025 is not an option. Well, of course it's not an option because we haven't filed our 2025 return yet. We're getting ahead. So what we want to do here is select a year. And really, we want to select the most recent year that we had a tax return filed. So if I filed my tax return in 2024, then I'll select that year. But maybe if for some reason I did not file 2024 and the most recent that I filed is 23, then we'll select 23. And then what we're going to do is we're going to go through these next options to verify who we are. So what was my filing status? It was married filing joint, maybe, or it was single. What was my first and last name, my social, my address on the tax return, my date of birth. So we'll fill all these things out. Once we're done, we'll hit continue. And the IRS then can verify who we are. And on the next screen, we can then type in how much we'd like to pay, an account and routing number, and we can hit submit. We'll get a receipt. You can print the receipt, get it emailed to you. And then ultimately, it's as simple as that. And that will be the easiest way, in my opinion, to pay these estimated taxes. And then the other way online would be you can go to irs.gov and you can create an account if you don't have one already. So if you go to irs.gov, you'll see a sign in option at the top right, and you would sign in for an individual, or you would obviously create an account for an individual, and you create this account through the IRS using their ID.me login system. And so honestly, this is the best long-term solution, in my opinion, to just go ahead and create an account so that you can log in at any time. You can look back at payments you've made previously. You can make payments once you get logged in through the ID.me system. And this is the best long-term solution. It's just obviously it takes a little bit of time to get this going, because to create the account, it might take you, 10 or 15 minutes. But I do think that's the best long-term solution. However, if you're looking for a quick, easy way to do it, the irs.gov direct pay option is probably the best. So that ends this video today. Thank you so much for tuning in. If you have any questions, please leave a comment below. If you found this video helpful, please consider subscribing or even just giving us a like. It means the world to us. So thanks so much, and we'll see you next time.